Okay, financial accounting. We're getting to the meat of this chapter now. Um, this whole chapter is obviously important, understanding why we do what we do in accounting, understand how the rules come, and things like monetary unit assumptions and all those are very important things. But now we're getting to the point where we're going to start talking about the accounting equation. And the thing about the accounting equation is that it's used throughout this entire book. You will use it starting now, and we'll continue to use it for the entire semester. And so it's very, very important that you understand this, or you're going to be lost for quite a while. So make sure to pay close attention to how this works. So the accounting equation is stated like it shows here. Assets equals liability plus stockholders' equity. Now let's define what these terms are real quick so that we know what's what. So assets are things that we own or have rights to. So either, the easiest one to think about is like cash or your buildings, those kinds of things are assets. But also if somebody owes you money, okay, somebody owes you money and you have legal right to that money because you sold them something and they haven't paid it yet, that is also an asset. It's called accounts receivable, but it's an asset because it is owed to you. Liabilities, on the other hand, are kind of just the opposite of that. It's money that I owe to someone else, or anything that I owe to someone else is generally money that I owe to someone else. So taking out a loan would be a liability. Bonds would be a liability. If I buy something and I don't pay immediately and say I'm going to pay you in 10 days or 15 days or 30 days, that would be accounts payable, which would be another example of a liability. So all money that I owe to other people that other people have rights to, that I owe to them, would be liabilities. Stockholders' equity is the rights of the owner in the business. Okay, so stockholders' equity effectively is what's the value of the ownership in this business. So this contains things like stock, okay, ownership rights, but it also underneath that also is my revenues and expenses, because who gets the profits from when a company makes money? And the answer is the owners. So, revenues and expenses increase and decrease my stockholders' equity, and the difference, the profit, ends up in my stockholders' equity section. So the way I generally speak about this is really, while there is technically only 3 parts of the accounting equation, I like to say, because it kind of is, that there's 5 different categories really. Even though revenues and expenses are underneath of stockholders' equity, and they are under stockholders' equity, it's absolutely true. I state that there's really 5 account types, and that's assets, liabilities, stockholders' equity, revenues, and expenses. Revenues, we defined last time, but revenues is all the money that's coming in. Okay, so every dollar that I make in sales, if I sell something, and all the whole dollar that comes in is revenue, and all the money that I spend in order to make those revenues are called expenses. All the costs incurred in order to earn those revenues. Remember, revenues are revenues as soon as they are earned. Expenses are expenses as soon as they are earned. Now, this equation has to always balance. It must always balance. If it doesn't balance, you've done something wrong. No questions asked. So usually people have heard the term equity with regard to a house. So let's talk about how that might work. So underneath assets, let's say you buy a house. Okay, and all I'm doing here is I'm just creating account titles. So underneath the assets, cash would be an asset, the house would be an asset. I could have other ones too. Liability, we'll use a technical term, it's called note payable, but I'll put in parentheses a loan. Okay, and then we'll have the equity here under stockholders' equity. But we won't deal with revenues and expenses on this particular one. So let's say I go buy a house. And let's say I have, let's say I have $10,000 in cash, and I go and purchase a home, but that home is $100,000. So what would happen? Well, I can't just go buy it without going to secure a loan. If the rest of it is going to be paid for by a loan, then I have a liability. So what would happen in this transaction? By the way, right now, because the money is all mine, I would have $10,000 in equity, because as I said, the accounting equation must always balance. So if I go purchase that house for $100,000, I take out a $90,000 loan, and I give the other $10,000 to the individual who's selling the house. What happens is my cash goes down by $10,000 because I just spent that money. My house goes up by $100,000 because that's the purchase price, even though I didn't pay $100,000, that is the value of what I'm receiving. My notes payable goes up by $90,000 because now I have a $90,000 loan. And my equity stays at $10,000. Because that's my equity in the house. I don't have the cash anymore, but my equity has changed over to the house. So what you should see if you come down and add all these up is it should balance. I'm not adding those, this is carrying the balance down, so it's 10,000 still. So now my total assets is 100,000. My total liabilities plus equity is 10,000. And every time I made a payment on the house, my note payable would go down and my equity would go up. So every time I make a payment, the amount I owe goes down and the amount of equity would then go up. So if I made a $5,000 payment, this would go down by 5,000, this would go up by 5,000. And I would still balance for a subtotal line. This over here hasn't changed to 100,000. This goes from 90 to 85. This goes from 10 to 15. As you can see, my assets in total are now 100,000. My liabilities plus stockholders' equity is still 100,000. But I had to make, there's two sides to that. Okay? There's two sides to every single transaction. So every time you do a transaction in accounting, there will always be two sides to that transaction. If this doesn't make sense yet, that's okay. It's kind of hard to wrap your brain around usually at first. So let's look at the transactions, business transactions, the accounting equation next. And we'll stop this video here for now.